Oh, good golly. That's rough to see. 25% decline here. After hours for Snapchat reported earnings just now. We're going to dig into them. This is crazy. Crazy stuff. Was down 30% at one point. Recovered a little bit, right? 25%. That's just terrible. So let's look at these earnings and see what might have happened. I mean, all things considered, naturally, tough comparables to last year to an extent. But it's a platform that continues to grow consistently. The main concern here, which we'll get into, because you look at these numbers in your non-GAAP EPS line, 17 cents beats by 9 cents, and a GAAP EPS line of negative 5 cents beats by 5 cents. So profitability beat. Still not profitable. The company's not profitable yet. Definitely on the way to get there. Not bad. Not bad, though, all things considered. It's a pretty big improvement year over year. Really over 50% improvement, all things considered. So pretty nice. Revenue, though, this is the concern. $1.07 billion, up 57% year over year is fantastic, but it is a miss. This is not a company trading at a valuation where it needs to miss. Now, the big shocker here, I think the big concern here is with updated Apple privacy policies, that this may be why it missed in terms of revenue. So this is kind of making a big statement with other social media stocks as well. Facebook down 5% after hours. Twitter down as well, just because of this, and I think that's because analysts are really Wall Street's afraid that this same news is going to come towards Facebook, Twitter. Now, Facebook, I think is fine. Let's just be clear. I think they're still going to hit their mark. I think it's a very fair estimate for them, and I think they hit it. They're a company that just hits historically. They just do it. So nothing crazy here. Daily active users increased 23% year over year, which is nice. It was over the consensus by 4 million. Average revenue per user, $349 to $363 consensus. Not quite what was expected there. Would like to see a little bit more in terms of profitability, but they can grow that pretty significantly. As far as the outlook for Q4, they're expecting 1.16 to 1.2 billion, which is over 1.1 billion consensus. So I don't see necessarily the entire issue here. I mean, there's a lot of reasons too. We've also obviously got the talks of the new social media darling. Not really darling, because everyone's gonna, want it to get taken down because they're little babies. Trump's platform. Oh yeah, it's coming on, baby. Truth, what's it called? I don't remember. But part of the reason why it's down too is because that's gotten a lot of talk today. So consider that. Let's look at the press release, see if we can see anything nice. Okay, let's go. Zooming in. So that net loss line came in at $72 million negative, which actually improved 64% year over year, much better than I even anticipated, which is nice. I thought it was around 50, but I'm stupid, okay? I'm a stupid dummy. That's good, though. Free cash flow is positive, $52 million. Like to see that against a negative line last year. Pretty good. Very nice. The revenue line we saw, great stuff. When you look 9 months ending, fantastic, 77% improvement, really good. Operating loss actually worsened this quarter for some reason, but on the 9 months scale, up 11% growth there. Net loss has improved 39% on a 9 months scale. Good to see that. Absolutely. And free cash flow has increased massively. Again, this is a very potentially high margin business that they're operating in. You see a company like Facebook that prints cash like the Fed. You're looking for good things. So let's see. As far as highlights, daily active users, we saw that. Really nice stuff. Increase of 57 million users is incredible. I mean, it's incredible. What do you expect? I mean, that's some massive growth. Year-over-year growth in daily active users exceeded 20% for 4 consecutive quarters. Really, really nice. A couple features they added. Nothing I really pay much attention to, but really all about AR lenses and different content that they're innovating with there. Definitely really focused on content to get people on the platform. As opposed to it just being a social media platform, they are trying to be a content platform as well. So, pretty nice. Guidance, we obviously saw that. We didn't see where the adjusted EBITDA was anticipated 135 to 175 million, not bad at all. I would like to look. Let's take a peek here. Financial documents. Don't mind me. There's a balance sheet hiding here, and there it is. Okay. Total current assets here at 4.4 billion. That compares to 9 months ago at 3.3. Pretty big increase in the cash position. Curious what the improvement there is about. I mean, they quadrupled their cash position nearly. Curious what that might be about. If they're purchasing, they're getting some purchase power for something. Total assets at 7.1 billion compared to 5 billion. Most of that obviously due to the increase in the current assets. But you see some improvement in this goodwill line here too, so worth mentioning. Liabilities sitting at 808 compared to 667. Not a massive growth in comparison to their cash position, but I presume that'll come out in the total liabilities as they probably took on some long-term debt or senior notes. As you can see here, it is the convertible senior notes, as well as other liabilities being long-term debt. So total liabilities at 3.6 compared to 2.6. That grew as well, but you grew assets by twice as much, so definitely an improvement. Shareholder equity at 3.4 to 2.3. And again, this is still a company really in its infancy in terms of its lifestyle as a tech company. So it'll grow to the point where it's able to print money. Again, it's really almost an infinite margin business, just depending on what ad rates look like. It's an infinite margin business. I mean, good grief. You see what Facebook does, and if Snapchat's able to capitalize on something like that, and they're working on it. They certainly are. You got to mention the stock's still up massively. I mean, year to date up 51%. It's given up a lot of that today, obviously, and on the last year up 92%. Past 5 years up 177, but really all of that has come from 2020 onward. 644% gain since really the dip in 2020. So this stock was due for a pullback. Trading a market cap of $118 billion. While it's going to revenue this year just over $5 billion, I believe, or I think it's going to be just under $5 billion, I should say. And they're trading a market cap of $118 billion. It's trading way too expensive. After this dip, should be trading closer to a $95 billion. Really, it'll be right around $90 billion market cap, I guess, which is still very expensive. I mean, we're talking about 20 times what it's making in terms of revenue. And still not profitable yet, but should be there next year at least. I don't like it. I don't like the stock still even at the $57 level. I do think it'll bounce back. So let's be clear with each other. If I were a betting man, and again, it depends on what the volatility looks like, implied volatility, I would play some short-term call options on this. Frankly, I'd plan on it because I think there's a lot of, again, we don't know where it opens at, but if it opens at still 25% down, I think it's definitely a decent play for some short-term call options because I think it'll recover at least 10% of this, probably within a week or two. We're talking about a big factor next week with the report of Facebook reporting, so just consider that. This could be massive for them. But that's what I got for you. Don't like the stock too much.